Hey guys, Rajiv here from Financial Hub India. So today's date is 5th of June 2018, and I'm saying Nifty. So far, we didn't have any trade, and the price action context is not much clear today, basically. So far, we didn't have any trade, and I don't think today we'll be able to have some trade because the key levels we are targeting for or we are looking for trades are not nearby. So hopefully, in lower time frames, in 1 minute, 3 minute, 5 minute time frames, we get something to trade, then we'll see to initiate some trades. Otherwise, we are not fitting today here. So since we have some relax time today, so I thought like, okay, let me share some lessons with you guys. So let me show the strategies we do in the breakouts. Basically, we have different types of strategies based on the different price action context in the breakouts, pullbacks, and flat market strategies, counter trend strategies. But let me talk about the breakouts today because a few people I have seen out of my members, I mean the new members joining in, as well as the normal queries I get generally, they have a lot of confusions on the breakouts. So not only on the breakouts, they have the confusions in the overall basically strategies what to do or no. But let me talk about the breakouts today. Now, I'll be telling you my thing. Actually, I'll not be recalling the overall strategies, but I'll be telling you that how I look at the breakouts and when something is breaking out, basically how we need to approach those price action context. And you can use your whatever breakout strategies you have. You can go ahead and trade those areas with your thing. So we all know when we trade the breakouts, basically there is a key level, right? When the key level, like here, we have a key level, how the key level is formed with the multiple touches of the same price action behavior here. So you have three resistances here, not necessarily three, it can be two, it can be one as well, depending on the price action context. So the normal behavior of the breakout is that when you have multiple touches, then you look for the price to give you a breakout move above that level of resistance. And uh, let's say it has fallen from here. So this becomes your next target. So this is how the price action really works generally, because the price action context. Now, what is the context? I'll do some other video in that. So in the basic idea, the context is like before this breakout happens, what's really going on behind it. That's the context. Okay. So the strategy part, which will take place, which will be implemented in here, that's just the cherry, and this entire thing, the context is the cake. So cherry on the cake. So you need to be more focused on the cake because that's the biggest part, and you will be less focused on the strategy. Till the time your context is in line, your strategy will play out in most of the cases. That's not a big deal, But in general scenario, the traders are more busy with the cherry here, with the strategy here. What's your strategy? What's your strategy? What's your strategy? How much accuracy? And they are less focused with the price action context. They don't even care. I have seen. They don't even care. So it's more important that before you take an entry or before you apply your strategy, this is very important to check out what is the story behind it. All right. Okay. Anyways, so while going for a breakout in Financial Hub India, I designed the course, in the advanced level courses. They were in the breakouts. I prefer to apply two different category of strategies. Let's say strategy 1 and strategy 2. So this strategy 1 and strategy 2 depends on the kind of price action happening here around the breakout area. Okay, so let me write it around this level here, 1 and 2. So 1 is when the breakout is just happening. I mean, when the flight is taking off, the takeoff is happening, not the yeah, I can explain it that way. So the price, let's say price coming back down here, and now price is just breaking the key layer. So this is the first attempt by the buyers of the price to break through the levels, right? So this is where we apply strategy 1, whatever it is, strategy 1. And strategy 2 is like the breakout already happened. All right, it has crossed a good amount of points from the key layer here, and then it comes back down to retest that key layer of support here. So that is like a breakout and a pullback. All right, and then also we look for some trade signal on the same key layer here. So whatever you're doing, we are doing on this layer. right? So that's where number 2 comes in place. So number 1 strategy is applied when the breakout is just taking place, and number 2 is the breakout already the breakout the first thrust of the breakout, the first momentum of the zoom breakout has already been happened, and then on the pullback we are trying to get back inside the breakout momentum, so that we can ride towards upside again from there. And one thing is that in 20 to 30% scenarios, when something breaks out on its first attempt, in 20 to 30% scenarios only, it just shot up directly to the next layer of resistance, or whatever your target is. Only for the 20 to 30%. This is my experience. And around 60 to 70% of the time, after a breakout move, you always get a pullback, and then it flies up. All right. So both the strategies are important. Both the strategies are necessary so that you can capture both the kind of trades, both the kind of breakout happens. So if you don't have a strategy, 1 and 2, see, I'm not going about what the strategy is. I'm telling you what the in what kind of conditions you need in what kind of conditions you need to apply the strategy. You can create your own strategy by the backtesting and whatever it is. That depends on you. But you need to have both the tools ready in your hand. And when a breakout just happens, at that time you need to first of all you need to try to capture the breakout with the 1, and then it should have its own ideas of trailing the stop losses and all, because I told you for 60 to 70% of the time it reverses, it comes for a pullback. So it means in 60 to 70% of the time, if you capture a breakout and this move up here when it's just happening, then also, even though you captured it, then also in 60 to 70% of the time you won't be able to reach the ultimate target, whatever you're targeting, because in 60 to 70% of the time it goes up some points up, and then it will give you a pullback, it will come down. So you need to make sure you capture this first breakout momentum, push towards upside, and the moment it reverses for a pullback using the lower time frames and all, you should have your plan ready to exit from it. So the idea of using number one strategy of capturing breakout is just to capture the first bullish momentum towards upside, the first push of the upside. Like here we have a breakout. You see that this is the first push towards downside from here to here. So in 60 to 70% of this is the thing which is going to happen. All right, and our target is that only. In 60 to 70% of the time, our target is to capture this zoop momentum, the first push momentum. And 30% of the time it continues, we make money in that. Big amount of money we make in that if it continues from there towards downside. But we are ready for a pullback even. So we start tracking that trade. Once it crosses certain points, we start tracking the trade for a reversal as well, so that we can early before the reversal happens. And once the reversal happens, it goes back to the layer of resistance again. Like here, it breaks out. Oops, sorry. Like here, it breaks out towards upside. All right, and then it's reversing. We try to exit it using, again, you should have a strategy for the entry, for trailing stop losses, for exit as well. So use your exit strategy so that you can be ready, and you are ready for the price to come down on the support area, pullback, and now you're looking for your buy entry over here on a pullback again. All right, so you start with strategy 1 and then you shift to strategy 2 so that the overall trades should not be missed here. Okay, so I think the concept got clear a bit, even if it's not 100%. Now, the next thing I want to share with you is that when we are going for a first attempt breakout using 1, even here we have 2 more strategies defined, because again, the strategy comes in place. Looking at the scenarios can be created, looking at the conditions can be created, right? So sometimes you will be seeing that the price just breaks the high of the resistance. Okay, the high of the resistance or the key level, and it just takes off. But a lot of times you'll be seeing there is a false break, yeah, and then price coming back down, right? So you never know. It can just break out. It can be a false break. All right. So how we filter it out? That okay, now what to do? Whether there is a false break or there is a there is a momentum towards upside directly, and it's going to be a big one generally when it happens. Now, just to filter that, when we trade this layer, because the difference between 1 and 2 is that in 2 the breakout is pretty much confirmed, right? You already got the breakout above the level of resistance, and then on a pullback move you're buying it using some other strategies, whatever it is, you're buying a strategy. So you are able to we are able to see the successful breakout before we enter the trade overall. But here on your first attempt, when the breakout is just happening, we don't know it's going to be a successful breakout or it's going to be a false break, which is not the case in number 2 here. You already know it. It was a successful breakout. Now you just need a pullback to get into the breakout overall, right? So when you are in when you are trading with 1 here, you need to have 2 more strategies where sometimes you'll be entering the trade directly above the resistance, and sometimes you won't be entering the trade directly above the resistance, but wait for some confirmation kind of thing. Wait for some kind of formations. I can't reveal the strategy, basically what I do, because that's a part of the advanced course. But do your own study, do your own maths. Okay, so you need to, once the breakout is just happening, you need to look some confirmation type of signals so that you don't get stuck in a false break over here. All right, now how we define when to enter the trade directly above the resistance and when to look for the confirmations. That's where the price action context come into the place, because the breakout, the key level will not tell us anything that which kind of scenario it is. It's just a key level. It's always constant. What will communicate with you different price action context is what is happening behind the breakout. This is what context we say. All right, and the same thing, sometimes we don't buy in this support level. We don't buy. There was a successful breakout, but price coming back down here on the support level, and we are not buying it. Even our strategy is triggering, but we are not buying it. Why? Because the way it came down was not supportive for the buyers. The price action context behind it, where we are going to buy or we are going to sell, is very, very important. In the price action studies, this is the most important part. I learned after so many years, because people mostly focus on the candlestick formations, chart patterns, all those things. And they just open the chart and look for, oh, I got a shadow. Wow, this is a reversal formation, so let's buy it. Oh, I got a pin here, pin bar. Nice formations, let's buy it. Pin bar, no. That's the last thing to look at it. Oh, chart formations, triangle formations. Wow, that's good. Let's sell it. No, that's the last thing. That's the last thing to do. I mean, whatever strategy you're following, that's the last thing to do it. That's just a 20% of the overall thing. 80% is your price action context. If the context is not clear or in context is not in line, the strategy is not going to play out. All right. Now, hopefully, with the context, I'll do something in future videos. Like with the context, if I just want to show you one trade. I think few days. Okay, yeah, this is the recent one. Not so far, on June 4th, yesterday only. This was a key support layer. And if you see, this is reversal bar formations, and this is one of our strategy. We just don't follow reversal bar formations. There are different kind of price action strategies we have based on different price action conditions. So this is reversal bar. I mean, there are some strategies we do where on pullbacks we look for reversal bars. But this is the bar we were not buying. This is we were long in here on this support layer, and we made good amount of money, around 6R we made in here, 6 times of the risk. You see here, price bounced back up from the support layer as discussed in yesterday video update. So this is the video update here. In the YouTube, you'll have it on the June 3rd. This is a free channel. If you're not there, be there. The link is in the description box. So look at this, what I've written. Price bounced back from the support layer as discussed in yesterday's video update. But looking at the kind of corrective swing structure, which is the price action context, we'll wait for a better opportunity to enter the trade. So we didn't enter it, even though the same support layer we bought in here. But same support layer, even though here, if you see, we don't have this strategy applied. So that's what I was telling you, we have different strategy to play with. So this is the support layer. So price came back down here and the price came back down here as well. But here you have the reversal bar strategy triggers over here. And we have some other LOC strategy triggers over here. But we bought it here, but we didn't buy it here. Even though the strategy was there, the support was there because of the, you understand these things, these lines, price action context. What is the context is like, I mean, the corrective swing I see, this is hinting me a very much established downtrend. There's a very much established downtrend. So the way it came down to the support layer, the context was wrong. And since the context was wrong, it means my 80% studies, my 80%, whatever I see in the chart is telling me it's bearish. And only 20% is giving me, okay, we got a reversal bar, we got a support area, we got the trend intact. It's not only that. I mean, I'll show you one more thing in terms of the context. See, if you go to the higher time frame, I mean, okay, let me just zoom in. Let me just go to the hourly chart. Yeah. So this is a key resistance here. You see that? This is a key resistance, and this will be more clearly identified in a 15-minute time frames here. So this is the resistance. Let me draw a line there. So this was the higher high, price goes above the higher high, a false break happens. And do you see the kind of selling pressure building up here? So basically the big guys or the kind of accumulation on sell-off already happened over here in these areas after the false breaks. And we had some trades over here as well. So that's the power of price action, higher high, price goes back up. Generally, a break of higher high should lead more higher levels, but that doesn't happen. That didn't happen here. Yeah. And this is the layer of resistance we have been tracking. This is the layer of resistance we have been tracking here. And the pin bar came in here on this area where the chart I was showing you in the channel, and the price goes back up and it stopped right over there, and the sell-off continues here. Yeah. So even though, like, if you see our current situation, we have a good trend in place, a downtrend. This is very much clean, but still there is no clear price action context we are getting into this trade to go ahead with a sell trade. Even though I have already mentioned this thing. If you see the free channel. So this was a thing. I mean, some clarity issues were there. Also, this one was the thing. This was the layer, and this is the same layer. What do you see in here? That chart was posted around here. The price was in here. So the price has fallen up to this much from that last post. So you see the downtrend looks quite stable. How you define it, the stability? That's price action context. Now, stable now to play with it. Let's play with it now. All right, find some short trades, guys, with the right place, with the right price action context here. Just wait for a minute. I just lost the activity here. All right, so sorry. I just lost the connection, basically, the internet connectivity. So that's the thing. That's the thing I was talking about, the price action context and actually in like your breakout trades. All right. So just to summarize our lesson on the breakouts and the strategies we do, we have two different strategies, 1 and 2. One is used when the breakout is just happening, when the takeoff is happening above a key level. That time we watch, and based on the price action context behind that, we decide to go with 1 or to go with 2. All right, and the second is the breakout already happens, and maybe we are in that trade using 1, or sometimes we miss that trade using 1 as well. And then on a pullback, we go ahead with a trade to get into the breakout again. All right, and then again, it depends on the price action context whether we are going inside the trade or no. But these two tools, total you have actually 3 tools, 1, 2, and sorry, 4, yeah, 3 tools. One has more 2 tools. So basically 1, 2, and 3. 3 different kind of tools you must have in your breakout trading strategies so that you don't miss it. Basically, these are the situations which keeps on happening on a breakout. So if you don't have one, have one. Find out and have one based on this price action context. Just don't just sit with A. Don't just sit with A or B or 2. You'll be missing a lot of trades. Thank you so much for your time here. I'll see you guys on the next video lesson. Thank you.